All right, guys. Thanks for joining. We may have a few other stragglers come in, but let's get Mark going. We don't want to waste anybody's time and get you guys going. Thanks for coming in. This is NoVA Reconnect, Volume 2, 2021, Episode 2. The theme is Level Up for 2021. Just again, Andrew and I thank you guys for joining, and we're hoping to provide some value for you. Today we've got Mark Kohler. He's a best-selling author, national speaker, radio show host, writer, and TV personality for Entrepreneur.com, real estate investor, senior partner in the law firm Kohler, Ostermiller Sorensen, and the accounting firm of Kohler Eyre CPAs. He's a man of many hats. He's fantastic. I've been listening to his podcast all week, which is an awesome value to go ahead and check out. And then as Kelly mentioned earlier, he does other engagements as well. So we're really, really happy to have him and super fortunate that he was able to take some time to speak with us today. With that, I'm going to leave it to Mark and let him take it away.
Thank you so much, Glenn, for that intro. Man, I'm just doing business as well, trying to get some texts out the door here. Well, I am excited to be here. And you know what? Let me ask this too, Glenn, so that I can really tailor my points. What state are most of the realtors doing their commissions or investing in? Give me some parameters geographically for your group.
I think most people here are in Virginia or DC or Maryland, or licensed in one of or all of the three. If anybody is not in those three states and anywhere else, just go ahead in the chat, let us know what state you're licensed in.
Okay. The reason why I ask is even I look at my own book on a regular basis, almost daily, to my tables in the back where I have different rules by state. And these books are not for CPAs, they're for the average person, but I was going to say the average Joe, because I'm texting a Joe here right before I started. But so I'm looking up some of my rules for Virginia and DC. We help clients all over the country. And so we really want to make sure, I want to make sure when I'm doing a presentation, I'm tailoring the conversation to your geographic area. So I want to have fun. I know that sounds crazy. I'm a dorky CPA, attorney, law firm, accounting firm, trust company. But I just love the American dream. I love entrepreneurship. Just to help you guys feel confident that I can speak your language, a couple thoughts. First of all, my daughter yesterday passed her realtor exam in another state. She's now licensed in 2 states. She's with a great broker. I'm so excited for her. She's 24 years old and learning the ropes. I've been taking her around to my workshops since she was 12 years old and teaching her about real estate and making her work on my rental properties and clean my office. And so she's my little realtor, real estate professional. And then she has a twin sister, Allison. And this morning I'm on the phone with her and her husband, who are 24, 25, and they're buying their first home, which is already a duplex, and we're going to be able to convert it to a triplex. The rent already will allow them to live there for free. Needs a new basement. They're buying it for $300. It'll be worth $350 to $400 by the end of the year. So a little rehab and that, and they're going to live there. And I just had a talk with them this morning. I go, this is going to be a bunch of work. You better be ready. I don't want to hear any complaining. So I myself own multiple rentals in about 3 states. I don't have like 10 or 20 rentals. I'm not, but I recommend all my clients buying rental real estate, whether they're storage units, commercial, single family homes, duplexes, veteran housing, elder care housing, meth labs, whatever it is, you buy it and let's get some cash flow going. You guys are all real estate professionals. So buying rental property is a huge part of your retirement strategy, huge part. And I know some of you are like, well, Mark, I'm barely making my house payment now or this or that. Hey, I get it, but it doesn't take a lot of cash to find a deal and to do some rental real estate. And I know I'm talking to some of you that are like, Mark, we are real estate deal makers. Who the hell do you think you are? But I've been teaching real estate investors for 20 years. And I myself fix and flip, rehab, and have rentals and own my own 2 commercial buildings, 2. We're working on a 3rd right now for one of our locations. So I think I can speak your language, so I'm excited to get your comments and feedback and questions during this presentation. So I could go on and tell you about my opinions about investing in real estate, but it's all good. So there we go. Okay, Glenn. Now I'm going to turn to you, Glenn, to like just corral me, bring me around, throw out questions that may come up from time to time. We're going to give away a couple books for those that stay on the webinar here. You're going to be making money by the minute in this webinar together. So I want all of you to have a yellow pad or a piece of paper handy because you're going to want to take notes. I will recommend that you meet with your own tax or legal advisor after this because I'm going to blow your mind, and then you're going to be like, who do I call? I'll give our number to the number to our firm if you're interested. We're very busy, but we aren't, turning away clients, but and give you a timeline of when we could be of service if you want that. All right. Number one, it's critical. You have to absolutely, and I'm going to be bold and say this, buy into this perspective. This is critical for your tax planning, your asset protection, your structuring. Very, very important. So I want to teach you the trifecta. So what I have for my clients is down at the bottom is your revocable living trust, married or single, kids, no kids, do not care. If you're going to buy real estate and have a business, you better have a trust because I don't want probate. I don't want to mess when you die. And half of America doesn't even have a will. So we're going to do the trust thing. This is your 1040. Everything flows downhill. Subsidiaries in my world are up above because I want subsidiary income to flow down into your parent companies and then flow down to your 1040. So the water runs downhill. The money runs downhill. We're going to put a line down the middle. This is basic. It'll expand. And I want to talk about left side, right side. Everything I teach today is going to be on this left side, right side. So you've got to get this and you're going to love it. It's going to be huge in your long-term planning. I want your operations on this side. These are short-term deals. Over here are your assets, long-term deals, or passive income. Over here, operations is your ordinary income. I'm going to do questions right after this. I mean, not at the end of this, in several minutes. I want to do some questions. So if you're like, Mark, I don't get it, my accountant's an idiot, or I love my brother-in-law who's my accountant, he told me differently, I want to hear it. This side of the equation is ordinary income that is subject to self-employment tax. This is where you get your 1099 from your broker. If you're going to short sale, fix and flip. If this is Chip and Joanna in Waco, Texas, they're creating short-term income. You're buying a house, when it's finished, you flip it. You're wholesaling, you're flipping a contract, you're short selling, you're getting commissions, you're selling a product, you're selling a service. That is this side of the equation, subject to self-employment tax. Now, before we go to the other side, here's what happens. All my brand new realtors, and some of you may be still in this rut and you don't even know it. My brand new realtors start out as a sole proprietorship, or they set up an LLC thinking it's going to save them taxes. LLCs do not save taxes, ever, ever. Sue me. I'll stand behind that in every one of my books and on the CNN and MSNBC, and I talk about it all the time. LLCs do not save taxes. But I'm a brand new realtor. Robert Shapiro on LegalZoom said, set up an LLC. My broker said, set up an LLC. So I set up a freaking LLC. I got a bank account. I got an EIN. That's great. But when you bring in that first 100 grand of commission and you spend 25,000 on expenses, marketing, cell phone, travel, dining, auto, home office, blah, 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 you write off all the crap you can and you net 75 grand. You take home maybe 6 grand a month. That's subject to self-employment tax, people. That is, you are going to pay, I'll put it in red here, you're going to pay 15.3%, which will be around $10,000 in self-employment tax. Then you pay your state tax and then you pay your federal. If you're in a 20 Fed, 5 state and self-employment, you could be paying 40% or more in taxes on your first 100 grand. Not good. This kills a lot of brand new realtors, dentists, doctors, engineers, plumbers, electricians, realtors. What do? I set up a sole prop. I set up an LLC. We're not going to go down the C Corp route because they suck. I write about it. We can talk about it if you want. C Corps are not what we do for small business owners. Certainly not in Delaware or Nevada. But our other option that came around about 50 years ago is the S Corp. Now, this could be an LLC with an S election. Now, if you have an LLC and said, Mark, well, I made an S election, then you don't have an LLC. You have an S Corp. So don't call me up and go, well, I have an LLC in Virginia. And then I find out 30 minutes later, well, I made an S election. Well, then you freaking have an S Corp. So if you make an S election, you no longer have an LLC. Now, the end of your name may say LLC for the Secretary of State of Virginia, but it doesn't mean you're an LLC for tax purposes. You're now an S Corp. So what's cool here is the same 100 grand comes in, apples to apples. You spend the same damn 25 grand on taxes and you net 75. Now we have fun because we split your net income into 2 pieces, part W-2 and part K-1. So the W-2 is your fair share of FICA, the F word, FICA. What the FICA? You can say that all the time and be fine around your kids. What the FICA? And they'll say, is that the F word? Yes, it's the worst F word of all, FICA, Social Security and Medicare. So you're going to pay your 15.3% over here on the W-2 portion, but not on everything else. So if I say, in this example, I usually do under 100 grand, a 40-60% split, all the way up to a 50-50, but just for math's sakes here, I'm going to choose 25 grand as a W-2 and 50 grand as a draw K-1. Now, some of you are already like, oh, that's way too aggressive. My accountant said I got to take more salary than that. Blah, 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 blah. We can talk about that. So anyway, you got your 25 grand, you pay your FICA on that. But look at this. This piece here, no FICA, no corporate tax, and no Obamacare. The more money you make, the more I save. So I'm going to split your income. This is tax strategy number 1. If you're a realtor, broker, engineer, contractor, developer, plumber, CPA, attorney, doctor, plastic surgeon, dentist, we're all S Corps. Literally, we are all S Corps. And when you start making 40 grand or more, the S Corp pays for itself, and the more you make, the more you save. When I was reviewing Trump's and Biden's tax returns last year during the race, Biden had an S Corp. Trump had an S Corp. Biden had a rental. Trump had a rental. It's just Trump was a real estate professional, so all the depreciation from all of his commercial properties wiped out his income, which I want for you as well, and everybody was up in arms. So you can't pay that little in tax. You're a real estate professional. You're looking at his tax return before he was president. So Joe Biden had rental property. He had an S Corp and he took a salary. And his allocation for salary was a lot more aggressive than mine. I got his tax return right here on my laptop. Anyway, this is so common. If your accountant hasn't recommended this, you got the wrong accountant. If your accountant is telling you to take a lot bigger salary, you got the wrong accountant. If you don't know what the hell's going on here, you're the captain of your ship. I'm not telling you got to do payroll or do your tax return on TurboTax. Hell no. But you got to know who to hire and make sure they're doing your stuff properly. This will save you thousands. Right here, we just saved 15% on 50 grand. That's $7,500. I just saved $7,500 converting to an S Corp. You know, well, I got to pay $1,000 for my S Corp tax return and do payroll for $500. Let me see. Spend $1,500, save $75. I know this is hard math, but let me just get this straight. You don't want to pay a little bit to get the stuff done right. Excuse my French. because it costs too much when you could save 5 times that in taxes. This is why tax attorneys make money, because every time you call me, I save you 10 times whatever you pay me. Don't worry about what you're paying me. I'm saving you more. So Glenn, that is topic number 1, questions. Corey, I'll take that rock start out if you got it.
Fire away any questions you guys have in the chat, or you can let us know if you want to just ask it yourself. I'll start with a question. As a mortgage broker on the mortgage side of things, does this advice carry over to those that want to make sure that their income still looks good for purchasing homes, financing homes, things of that nature?
Yes, because you're not going to go to the 18-year-old at the desk of the credit union. You're going to go to a guy that knows what the hell they're doing. And they're going to add back depreciation. They're going to look at your K1. They're going to look at your W-2s. A good mortgage broker knows entrepreneurs. They know they have overall income, and they can grab it and show it to an underwriter. If you just go into I want a Fannie Mae, Freddie Mac, FHA loan, they'll go, where's your W-2? You don't have a W-2? You know what I'm saying, right? This is all good. The W-2 and the K1 are combined for total income. My lenders look at both.
Correct. 100%.
2 things for a novice, Mr. Mark, can you explain what a K1 is? And then also as well too, what the process is. If we already have an LLC in place, what would be the process of switching that over to an S Corp or having it under the S?
Okay, 2 questions there, everybody. I'll repeat them. First, let's just say you've got an LLC. I'm going to go in reverse. Dude, it's really expensive to convert you to an S Corp. We charge $150. Done. Done. Your EIN stays the same. Your bank account stays the same. Your company name stays the same. We do an S election right now, effective 1/1/21. You're good to go for the year. Done. Then you're going to start your payroll procedure, because throughout the year, you're going to do your payroll reports at the end of each quarter. At the end of first quarter, which would be in April, July, October, and at the end of the year, you're going to get a W-2. Now, to answer your first question was, what in the hell's a K1? The K1 is the profit. It's like a W-2 for business owners. You're going to get a W-2 that's your wage, and you're going to get a K1 is your profit. Those 2 is what gets you a loan at a bank. This is what's going to go on your 1040, your W-2 and your K1. And by the way, guys, I'd say this humbly, I'm so excited to be with you. When I've taught this class to so many realtors over 20 years. About 15 minutes in, everybody's like, what the hell? Why didn't I know this? So if you're having that feeling going, well, this is complex or this or that. Hey, you're a realtor. You're good selling. You hate bookkeeping. You hate taxes. You go out and make money. Just hire the right person to do this crap, and it will save you thousands and thousands of dollars. Step up to the plate and be the captain of your own ship. You're going to freaking love this. And this is strategy 1. Strategy 1. I got a book with 38 chapters on strategies. We're just talking strategy 1 that could easily save you 5 to 10 grand this year.
A quick question here. Denise is asking, which one is better in terms of tax savings, leasing or buying a car by financing?
Okay. We're going to switch to the auto expense. Is that the question you had, Corey, too? Yeah. All right. So what's her first name?
Denise.
Denise. So Denise, I'm going to put you on the spot. I'm assuming you have your S Corp done. You're doing your payroll and you're doing all these right things. Bless your heart. And now she's going, I don't care about that, Mark. I already dialed that in. I want to talk about auto. All right. I'll just divert to auto for a moment. She said, what is the best financial strategy to lease a vehicle or have a loan in terms of tax savings? Okay, Corey, you know what to do. Grab that article from January, put it in the chat if you could. All right, I have an article I do at the beginning of each year to update the numbers for the year for auto. That article is an entrepreneur, or maybe it's on my website, whatever. But I go through 7 criteria or 7 rules of thumb on how to write off your car. many of you as realtors put on a ton of miles. Let me ask you, what's the problem with leasing? Oh yeah, you get a BMW or a Mercedes or a sexy car at a low payment. But what's the problem? You're limited on your miles, or you got to write a big check when you show up with that car 3 years from now. So if you're a realtor, I'm usually not leasing because financially it's going to kick your butt. So don't let the tax tail thinking, by the way, tax strategies for leasing aren't the best either, but some people go, I'm going to lease because I want that low payment, and you shoot yourself in the foot because of mileage and for taxes. I'm not a leasing fan unless it's your second or third car and it's for those important appointments, or you're making so much damn money you want to lease a Bentley, fine. But leasing for your business vehicle, typically not a good move. So that leaves you two major options to write off your vehicle: actual or mileage. Oh, where to go with this? So I mean, I give a 45-minute class on how to write off auto. I'll just say this: if you're going to put on a lot of miles, which is a realtor, we're going to lean towards mileage. If you're going to buy a bigger vehicle or even an SUV with over 6,000 pounds, I'll probably lean on actual because I want to write off the whole truck or SUV with bonus depreciation all in one shot. Also, under Trump and the GOP, Tax Cuts and Jobs Act, they threw gas on the fire. The auto deduction is the best it's been in 50 freaking years. So if you're going to buy a car over 30 or 40 grand, cash or loan, I don't care. And we're going to look at depreciating it and going actual or going mileage, but it depends on your use of the vehicle. How many miles are you going to put on? Where are you going to use it? So your question is awesome here. And Corey, once you get, my producer is going to put a link to my article on that in chat. Go check it out and read up on it. And I've got a YouTube video on it as well. Everybody's different on the auto deduction. Okay, Glenn, any other questions on that? Everybody's got this down. No one has other questions because I got them for you. But if you're not going to ask them, I'm moving on. This webinar is for you people. I'm not going to spoon feed you.
No questions in the chat as of right now.
All right, Kelly, seriously? This is your crowd, huh? This is your tribe?
This is my tribe. Talk about the meal deductions.
All right. Okay, Kelly loves the meals deduction, so I'm just going to say that. Then we're going to come back to this other side of the equation. Because, again, all of you better have your S Corp doing your salary allocation. And I have a matrix in my book on how much your salary should be, how it's handled, when you take draws, who you pay, how much it costs, all those questions. Read the chapter on S Corps, hit YouTube and type S Corp Kohler, and you'll see my whole channel. I've got my silver play button, 2 or 3 million views. Please check it out. It'll help you out a ton. Well, one of the best tax deductions that literally just came about in the last 2 months, on December 30th, under the new COVID relief package, 5,500 pages freaking long, the dining deduction is now 100%. This is huge for realtors because realtors go out and go to lunch all the time with clients, partners, brokers, customers, networking. You're eating all the time because it's a social thing, and selling real estate, you need to be in social circles. If you're an introvert, you're an accountant or engineer. If you're an extrovert, you're going to be a realtor or an actor or, in entertainment. And I say that with all love because my daughter Sydney is going to kill it.
Does that mean you're both?
Pardon?
Does that mean you're both?
I am a spotted white leopard of accountants. I'm the
Mark's an exception for sure.
Yeah, I took a lot of therapy, Glenn, to get to this point. I mean, I had to go into rehab to not think like an accountant or act like one. It took a lot of work. Shock therapy, waterboarding, all of it. It took a lot. All right. Now, dining. Dining is 100% write-off. Now, what I love about dining is, this is a big topic too, and it's freaking awesome. You've got really 4 types of dining. 1, 2, 3, 4. Now, you may have thought, Mark, dining's dining. No, it's not. Okay, first, it used to be 50%. Now it's 100%. Dining talking business with someone. Now, you guys are pretty familiar with that. You're driving around showing property. You go through Wendy's or Carl's Jr. and pick up a hamburger. That's a write-off. 50% write-off in the past. Now it's 100%. The new bill says, however, it has to be a restaurant. So if you go out to dinner at a Ruth Chris or a Mastro's and spend $200, it includes the bar tab, the wine, the tip, all the food, 100% write-off if you're with someone talking business. But you're like, oh, I'm going to have this contact over and make him a homemade dinner. So you go to the grocery store and buy all this food to have a meeting at your house with your client. 50%. It was not at a restaurant. So I'm going to put that over here in number 3, prepared food. I'm sorry, non-prepared food or snacks. So if you have a coffee maker in the office, you buy snacks for the kitchen in the office, water cooler, 50%. Number 4, you buy food at a restaurant, take out or delivery, and you have prepared food in the office for an office meeting. Office meeting with restaurant food. Now, we're waiting for further guidance on the IRS on this because this is a new law in the last 2 months. But what's prepared? You go to the grocery store, but you go to the deli. Interesting, right? You go to the salad bar, which don't exist hardly anymore. But I'm going to go out on a limb and say, if you go to the bakery and buy donuts for the office, that's prepared food. It's a bakery that made the food for you. I'd take 100%. But if you go to the grocery store and buy a box of Hostess donuts, 50%. See the distinction? So in your books, you're going to want to make sure that you're really clear with your accountant. Here's my 50% food and here's my 100% food. Because you better have both. You don't want it all in 50 or all in 100, or the IRS is going to go, what is this person, an idiot? And it's going to get audited. You're going to get flagged. So you can even take 2 debit cards or credit cards and say, my American Express, I'm always going to use for restaurant food. My Capital One, I'm always going to use for non-prepared food. And that way, at the end of the year, your accountant can go, what the hell is all this? That's 50% food. This is 100% food. Make it easy on your accountant to figure out what you're spending your money on. Number 2, you can write off 100% of your food while traveling by yourself. I was just last week, I did a road trip. I had to go and some flights. Southern Utah, Southern California. We have offices in both locations. And so I'd get up in the morning, hit 7-Eleven, pick up a Rockstar, a drink, whatever I wanted, banana, 100% write-off. Didn't talk business with anyone, but I'm traveling for business. Now that line is your normal daily commute. So if you say, well, I'm normally in a certain, I don't know, a town that most of your, Glenn, where do you guys mostly operate? What city in Virginia or Maryland?
Everyone's kind of all over. Northern Virginia, Fairfax County.
Where are you?
I'm in Loudoun County.
Loudoun County. Okay. So that's probably where you spend 90% of your day. Fair?
Fair.
Once a week, you head out of the county to go meet a customer, go look at a property, take a client on a tour, go network with someone, go meet someone in your brokerage. When you go out of the county, 100% food write-off, even if you're not talking business with someone. So keep that in mind when you're traveling. The non-prepared snacks, we talked about that, 50%. Office meeting with restaurant, 100%. 100% while traveling, talking with someone, 100%. The last one, I'm going to put number 5 here, are your open houses and your events. So when you do an open house and you buy prepared food or non-prepared food, it's still 100% because it's for your customers at an event or a social or an open house. So the cheese, the crackers, the wine, the donuts, whatever you're doing at an open house or a workshop or an event for your clients, for your customers, 100%. So I'm going to put event or open house. Kelly, how's that? You good?
I'm good. So what if we get a food truck for an open house? Can we write off the whole food truck?
100%. 100%. Absolutely. It's just like whether it's prepared or not, you're holding an event. And so that's a cost of goods sold. You're holding an event to sell and so you're good. 100% on the food truck. Do you have the In-N-Out food truck out there yet?
We don't even have In-N-Out like restaurants or drive-thrus. I know it's not an East Coast thing.
From about Arizona West, we have the In-N-Out burger, which is the rival to Five Guys, of course, many of you know, and they have a food truck that's freaking awesome. They pull up with their truck and just make burgers and so good. Okay, now let's go back over here, the trifecta. All of you out there, if you're not netting 40 grand right now, you're going to stay a sole proprietor LLC. When you start making money this year or more money and you're making, the break even is around, you're taking home after expenses around 3 grand a month or more. You're going to call your mom, then you're going to call my office and go, make me an S Corp. Now, if you're not an LLC already, I can't backdate you into an S Corp. So a lot of my new realtors, and I did this for my daughter, Sydney in Orange County, California, selling real estate. She's an LLC. You say, well, Mark, LLCs don't save taxes. They don't. She gets all the regular write-offs that an S Corp or LLC would get, but she's not making enough to make the S election yet. So all of you out there, one of my first recommendations is get your LLC set up in the state where you live, where you're a resident, where you're doing business primarily. That's where you set up your LLC. 100% owned, manager managed LLC, not a member managed. Get all of your pieces and parts, do it right. We charge $450 with our paralegals to do it right. LegalZoom is not $99 because when you check all the boxes you're supposed to, it's going to be $450 or more. Then you could, if you wanted, go to a law firm. We charge $800 for any LLC in any state or S Corp, and you get an hour on a phone call with a real attorney building a plan for you, and then you can do your annual review with that attorney and build a relationship for the long haul. We are not a one and done, but that's what you're shopping for. If you don't use us, it's fine, but that's your price point. You shouldn't pay more than $1,000 for your entity, and you should get an hour consult with a real tax professional lawyer that knows what the hell they're doing. So you're not telling them. And I teach classes to other lawyers and accountants, and I'm teaching the same stuff. And they're like, I didn't learn this in law school, and they love it. You're ahead of the curve by being here today. You got a great brokerage. These little webinars there, Glenn and Andrew are holding, you come to them every freaking week because it's going to make you a better business owner. You're a business owner first and a realtor second. Those are two different things.
Mark, can I ask a quick question? I don't know how many people on this call. So I own my team, right? Like I have Finest Realty Group, and then we have agents under us, under me. So Kevin with KKOS has helped me set all of my stuff up. But I actually have agents that are on my team on this call as well. And I was wondering for them, like, do they still set up their own LLC? And, even though they're on the team, like they do get 1099 directly from our brokerage. So it would still be beneficial for them to set up their LLC and then transition to an S Corp, or they can't really do that because they're individual agents technically.
Okay,
on a
I'll
team.
answer that. Let me ask your brokerage. When you say our brokerage, is that your brokerage or?
No, that's Coldwell Banker.
Okay, Caldwell Banker. Okay, so Caldwell Banker, you're an agent broker for them and you build a team, right? And Caldwell Banker 1099s you, right?
Yes, yeah, correct.
Okay, and then your agents on your team get a piece and they get 1099 from Caldwell Banker too. And even though they're on your team, they're still working for the broker, which is Caldwell, right?
Correct, yeah.
Okay, so let's do this. So this is Kelly's picture. Here's her trust. Here's her S Corp. She's doing her salary dividend split. She's writing off all her expenses. I'm not even getting into kids, spouses. Oh my gosh, there's so much to talk about. But she's got her S Corp foundation. The brokerage up here is Caldwell. They give Kelly, actually, they do not give Kelly a 1099. They 1099 her S Corp. Great. And she's got a team over here. Aren't they agents too? Aren't they getting a 1099? Aren't they their own business owner? Hell yeah. Everyone on your team should be an S Corp because they're a business owner. They're a business owner on your team working for Caldwell. That's it. They're the same as you. You're just the team leader. So every one of them should be an LLC at least now, and any of them that are making more than or expect to or are already making 30 to 40 grand a year net, they better damn well be an S Corp. So we're going to convert these to S Corps at the right time for each individual. So they're going to have their own structure down here. They're each going to have their own little mini structure. So when you get on a phone call with my attorney, we're building your structure, Kelly, and then we're going to go over and talk to someone else and build their structure. But it all ties into, in this example, Caldwell. But what's cool, let's say Kelly goes out and says, I'm going to sell some crap on eBay. I'm going to start doing hair and nails. I'm going to start doing interior design. I'm going to She can run multiple things through her S Corp. My S Corp probably has 9 sources of revenue. But when I set up a partnership that's operational, my S Corp owns the share. So my S Corp is my parent company in every partnership. If Kelly or Andrew or Glenn called me up tomorrow and said, hey, Mark, let's do a fix and flip out here in Maryland. We got a killer deal. I'm like, all right, I'm not going to do it. It's a fix and flip. It's a short-term real estate deal. My S Corp's going to do it. So I form a partnership with Glenn and Andrew and Kelly. Their S Corp owns their share, and my S Corp owns my share. Probably 60% for me and 10% for them. Well, maybe 70% for me there. Okay, that's a joke. Okay, now.
Sounds fair.
Okay, now let's get this on the table. You got your short-term operations. All of you are going to be building into an S Corp now or near in the future. What's over here? This is what LLCs were originally created for. I'm going to have another little wall here for asset protection. This is my LLC for rentals. I've got a brother, sister. The S Corp is owned by my trust. The LLC is owned by my trust. The LLC does my rentals. The S Corp does my operations. Boom, bada bang. This is the realtor. This is their duplex. This is the dentist. This is their building. This is the lawyer. This is their building. This is Applebee's. This is their building. Restaurants don't own their building. They have a separate holding company for the building because that's a separate asset. And I want a firewall between the two. Your S Corp better not own anything. You want to sue me? Come after my S Corp? You're going to have a cell phone and a laptop. That's it. There's nothing in my S Corp. All my rentals are over here. You want to find me? You can find my S Corp in a heartbeat. I want you to find it. This is my brand. You want to find my rentals? Good luck. Camouflage, asset protection. Not hidden from the IRS, but hidden from creditors. And I'm going to be, hopefully, a real estate professional through my spouse. Because if one of you in a marriage is a real estate professional, both of you are. So that's a whole other strategy, whole other chapter. So rentals in an LLC, operations in my S Corp. Here in the middle is my 401k, solo, my Roth. I can do both. I can have an HSA. I can have a SEP. I can have my spouse's 401k, HSA, my kids' Roth. Oh, baby. This is my tax-free section. And I'm going to try to build as much tax-free income as I can. And they're going to have their own LLCs. So I'm going to have LLCs owned by IRAs, LLCs owned by me and my trust, and an S Corp doing all the operations, kicking out profit that I'm going to take out and redeploy over here. So all the profit from my S Corp is going to come out and go bing, and redeploy it for the future. Questions? Isn't this fun? What do you want to talk about, Glenn? I'm all yours.
Anybody have any questions? I mean, that was
seriously, no questions. You know, I'm $600 an hour, people, and I'll save you 10 times that when you call. And my appointments, I'm out a month. So if you have a question, you may want to hit me up now. If you want to get an appointment with one of my attorneys, you start with $400 retainer. We'll apply it to any entity you're going to do. So if you do an entity, we charge you $400 more after the consult and get the filing fee and whatever. But $400 gets you an appointment with one of my 6 tax attorneys, and they help clients every day around the country. They're out about 10 days, about a week and a half. So you got me here. No questions.
I want to know, so you guys do bookkeeping? Like, I haven't used you for that ever, but do you have people who can do that? Because honestly, like, I'm going to totally give you a plug right now. Everything that I have had you guys do has been significantly less expensive through you all than through other people that I have found locally.
Oh, I know. Crazy.
Yeah, it's like the minutes I had you guys do my annual minutes or whatever. It was so cheap. I was like, this is awesome. And all of the people that we come into contact with are fantastic. They communicate well. Like, it's great. So okay, somebody just put the link for your book, so that's awesome. That's what I was looking for too. Because I actually don't have it. I just watch all of your YouTube and Facebook material and stuff like that. But yeah, so tell me, like, bookkeeping, because I do think that's probably something a lot of people on here could benefit from. Like, none of us are good at paperwork. That's why we're in sales.
Yes. Thank you, Kelly, for those kind words too. So I'm going to do it. I don't normally talk this way, but Kelly asked. I'm a 4-headed dragon, if you will. There's four things I want you to know about. And you can choose to work with any one of those 4 or a combination thereof. First, I'm going to call MJK. I've got books, videos, YouTube, podcast, blog articles, a lot of free content. I also have on my website, a membership site that's $300 or $400 with like 20 hours of videos and training, lifetime membership. Once you buy it, you never get charged again. So I do monthly webinars. Kelly was on last night. It's $20 a month, live webinar, ask questions. I was on for an hour and 45 minutes helping people. So that's MJK. That's me, the brand. That's me, Nancy Grace, Robert Shapiro, whatever. That's me. Number 2, you say, well, I want to use your law firm and get some legal work done. I've learned a lot of education from you now, Mark. I'm ready to go to the next level. I want to get a consult. And I do recommend that first. You go to the law firm, meet with the tax lawyer, and they say, here's your plan. What entities you need. Let's get your estate plan done. Let's look at your tax return. Let's get your minutes cleaned up. Let's get your stuff that's jacked up, organized, and give you a plan. The plan could easily be part of setting up an entity. At most, you're going to spend $1,000, get an entity at the same time. But if you just want time, starts at $400. You might get an entity out of the mix too and spend an extra hour at most. You might be at a $1,500 total. And you're meeting with a real lawyer helping you.
Here's a quick question, Mark, that might interject at that stage. Jean asked if her friend, quote unquote, forgot to do payroll for 2020. Can it be done retroactively, or is that a huge red flag? I'd imagine that fit into that law category.
Okay, Jean, it's funny you bring that up. The text I was sending to Joe that I referenced at the beginning was on that very topic. So Jean, I'll answer that in 2 seconds. So anyway, we got law firm, then we have the accounting firm. Accounting firm does payroll, bookkeeping, tax returns. You can use those for one of those, all 3 of those, whatever. Use your local accountant. But if you're training your local accountant on my strategies, you might want to upgrade. And there's good accountants locally. You just got to find them. And I train accountants around the country. So find your good accounting, but you can have us for law firm or accounting or both. Finally, we have our trust company. And this is where you can set up your self-directed 401k, your self-directed IRA, your Roth, your Coverdale, your HSA, so that you can buy real estate with your retirement account. And you've heard about that out there. We've been teaching it for 20 years. So that's directedira.com. We recorded a webinar 2 nights ago where we train our clients for free. We've got books and videos and a workshop in 2 months on that and blah, blah, blah. So we've got these 4 different services that you can use. And I'd say just start with the education. Just start. You're the captain of your ship, people. just listen to my podcast once a week. We try to ham it up and make it fun. I got my YouTube videos are easy on the brain and eyes. I try to keep them simple. And I'm not teaching you how to be a lawyer and accountant. I'm teaching you what to know so you can hold your lawyer and accountant and financial advisor accountable so they can respond to you. All right. Now, Gene says, Mark, I think Gene is saying I was an S Corp. Let's start with a fresh trifecta. So here's the trust, and here's our brother sister, S Corp LLC. My S Corp owns my rental. My LLC gets my S Corp, sorry, my S Corp gets my 1099. My LLC owns my rental. This is really, really common. My clients have their 1099 S Corp, their LLC rental. It all goes into their trust and their 1040. Okay, that's level one. If you have an S Corp, you're required to do a W-2. You're required to take payroll out quarterly and send in your money 4 times during the year. Glenn, if you're really an S Corp and you didn't do that, the first thing I do is send a nasty email to your accountant that set this up and didn't help you. Number 2, it's clunky. But the first year you jack this up, there's kind of a backdoor method to keep you generally out of hot water with the IRS. It generally works. We're going to give you a CYA that says if you get audited, it's on you. You screwed up and should have done your payroll. But I would say 990 times out of 1,000, you're going to be fine. What we do is we 1099 the amount you should have taken in salary out to your Schedule C, and we pick up your FICA here. And we still do a K1 for that percentage we decide is safe. You're going to still save taxes, but the IRS does not like you 1099 yourself. Technically, you're not supposed to. But the first year, they realize a lot of people are getting used to running their S Corp and they screw up and don't do payroll. So they say, we can do this 1099 thing, but you better not do it again. So Glenn, you want to make sure you're with an accountant that's cool with this. By the way, I'm going to rock your world, Glenn. Please come out verbally here and tell me, did you get a PPP loan?
Well, I'm not.
Oh, Glenn, is this? Hold it, Gene.
But,
Sorry, Glenn. Gene.
I guess my follow up to Gene's or to your answer there, for Gene, if she can hop in on there, is if she hasn't established an S Corp yet and it's just an LLC, is the answer the same or is the answer different?
Okay, now we've got a whole twist to this. When Jean asked the question, she said, I was an S Corp, at least how I took it, and I didn't do payroll. Now I'm hearing I wasn't even an S Corp. I was an LLC. Jean, come out and talk to us. What the freak did you have?
Gene, come out and play.
My friend,
and I guess that was, and that wasn't G-E-N-E. I thought it was a male. It's J-E-A-N. So Jean.
She said, my friend is an LLC filing as an S Corp, no PPP.
Okay, thank you, Jean. Okay, so Glenn, that answers your question there. She was not an LLC. She was an S Corp because she made her S election, right?
Correct.
So Jean, you should have done payroll. We're going to do this method. And you didn't have PPP. Frankly, I'm a little surprised by that because many realtors went out and got PPP. But of course, you didn't take payroll in 19. And I don't know if you were an S Corp in 2019, jacked up as well. You may have not qualified for PPP if you were an S Corp in 19 and didn't take salary. So it sounds like we need to do some cleanup. And by the way, everybody, don't pick on Jean. I'm not trying to expose her dirty laundry. This is common. You guys are good at sales. You're not good at this stuff. But that's why you're here today, is to learn it and go, oh my hell, I better have the right person helping me or team. So if Jean did PPP, the Fed said it's not taxable. Most of the states said it is, or they haven't legislatively decided yet. So Jean, if you're working with our accounting firm, we're probably going to extend you, get your S Corp ready to go, plan on doing the 1099, And we're going to wait to see what Maryland, DC, or Virginia says, because I don't want to file your tax return and have you pay state tax on the PPP if you don't need to. So for you on the call that got PPP money, we got to take that into account. Next, I don't know if any of you at the brokerage level had W-2 employees that weren't family. You got the ERTC, which is a huge strategy. Next, the PPP second round, you can still apply for that, people, and it's your deadline's March 31st. So if you want to go get some money, you can still do that. You had to just show a 25% reduction in sales in any one quarter from last year compared to 19. And I know realtors could show that. So if you're like, Mark, I didn't even know about this. Again, this is why you need to be checking out the newsletter and the podcast, which are all free at my office or somewhere if you don't like me. So that's a whole other Gene, Glenn and Andrew, I've got realtor groups around the country trying to book me right now to just talk about PPP and ERTC. This S-Corp stuff, this is normal stuff. I've been teaching this for 15 years. So there's a lot of things going on, people, a lot of things.
Brian wants to ask if Virginia and or Maryland have ruled on taxing the PPP money yet.
I knew you were going to ask that. I don't know. Literally, we have a staff meeting at 2 o'clock today to go over it. We have a Checkpoint IRA, Checkpoint RIA is our tax service we're relying on right now. California said they're going to tax it. Utah said, I don't know on Virginia and Maryland. You Google it. Let's go freaking Google it. Is Maryland going to tax my PPP money? All the states are broke. Sales tax is down, income tax is down. They don't want to give away PPP money. The feds did it, but that's why this next 2.9 trillion that Biden's trying to get passed, most of it goes to the states. They're just trying to help the states that are suffering. So my guess is most states are going to tax you on your PPP money. I don't know on Maryland, Virginia. Sorry, guys. Look it up. Google the hell out of it. Call your legislator. You should. Call your local representative for your state region as your representative or your senator and say, hey, is my PPP taxed at Maryland level? They should know. And if you say, please don't tax it, send them an email. This is what your politicians are supposed to be doing, representing you. So call your local rep.
All right, 2 more questions that popped up here. Denise wants to know if she's an LLC now, not filing as an S-Corp, and she files her taxes with her husband together currently. Should she have filed separately?
Generally, no. I want married couples to file together. Married filing joint, 9 times out of 10 saves you taxes. So Denise, I'm just saying you're going to file your LLC or S-Corp as your business, and then it's going to flow down into your 1040. Now, your husband may have a business too. Your husband may have a W-2. I don't know, but we're going to do a married filing joint return for you as a couple, but your business is going to be separate, typically, until, unless you're a sole prop, and then you're going to be a Schedule C. But no, 9 times out of 10, if you're married out there, folks, I want you doing married filing joint. Well, it looks like we're at almost 11 o'clock here, Mountain Time.
Yep. Wrapping up.
Any other questions?
Yeah, this is a great kind of wrap it up question. Is Sam wants to know if there's any expenses we're not discussing that are important to our tax saving strategies. And we'll start to wrap up and let you kind of sum up.
Okay, let me get this straight. Sam said what?
Any expenses that we haven't discussed that are important to our tax saving strategies.
Sam's like, what is the secret to life? Oh, well, I can answer that in 30 seconds. Sam, what the hell? I've got like 30 of them. Of course, I don't have time to go through that. And I know you're probably smiling. In my membership site, markjkohler.com, I have a video on business expenses for small business owners. What should they be thinking about? I talk about this in my workshop videos. I teach a 2-day class on write-offs. I'll just rattle off a few, Sam. cell phone for you and your board of directors, which should include your spouse and children or your parents, your rental properties, dining, auto, electronics, computers, travel, office expenses, marketing expenses, legal expenses, accounting expenses, internet, Uber. Every client's a little different. I mean, your children should be on your expenses. 401k, solo 401k, SEP, Simpler, Roth. I'm going to be shifting expenses over there.
While you're thinking, Mark, I've heard from several people so far about paying your kids. Can you expand on that?
I will just say this, go to YouTube and say paying kids under age 18. My video will be in the top 10. If you want to put Kohler, pay your kids. I've got videos for above age 18, below age 18. There's a whole other diagram that starts to play into this that we don't have time for. If anything, I'm not trying to be a salesman today, and I want to know who your 2 winners are that you're going to give away these books to. If you want to start with the best book that's just getting started, is the Tax and Legal Playbook, 2nd edition. Get it on Amazon, put it on my website. We're going to give one away here. Start absorbing my YouTube channel, my weekly podcast. You will actually love it. Remember, all of you, you are a business owner first, a realtor second, and you can't rely on your mom's CPA that's 90 years old to be your business advisor. You got to take the bull by the horns and find the right team members nationwide to help you succeed. Whether it's social media marketing, it's accounting, it's legal, it's website design, I don't know. But you've got to be the captain of your ship and know what all your first mates are doing. So please invest a little bit in our education, get a console if you need it. Just paying your kids is a 2-hour video on my website that you can buy for $300 with 30 other videos. So do a little research on that and it'll save you thousands. Like Kelly said, no one regrets spending money at my office. Once they figure it out, they're like, every time I spend money at Mark's office, I get tenfold back because I'm learning how to make more money or save money. So I'm so grateful to be here with you guys. I'm going to just show you, this is a diagram that Kelly was on a webinar last night and looked at, and this is the level you people get to. Look at this bad boy. This is a diagram for a client that might have been with us for 2 to 3 years. And we got operations, day jobs, S Corps, partnerships, 401ks, Roth IRAs, LLCs, rental property, your home, investment accounts, life insurance, passive losses, paying your kids, your HRA, your HSA, your family trust, your 1040. You should be able to explain. I bet you right now, Kelly, if I gave you the time, you could, right now on the call, you could explain this diagram, couldn't you? Kelly, come on.
I could do pretty well with it. Yes. Yeah.
Okay.
We went over it in detail last night. I mean, you're very entertaining, but I also learn from you because you're entertaining. So I love all of your stuff.
Well, thanks. But you guys, if Kelly can understand it, all of you can understand it. I know how smart Kelly is. So you're going to be fine. So that was a joke. So it's not, you guys, accountants and lawyers, well, especially lawyers, are jerks. They try to make it seem more complicated than it is. It's not. You should be telling your lawyer what the hell to do, getting some advice back on the future. You can do it.
Anybody else have any final thoughts or questions for Mark as we wrap up?
Thank you so much. Amazing class.
Thank you. Thanks, everybody. Hang in there. Thank you. All right, Glenn, we'll see you. Appreciate you. Thanks, Andrew. Thanks, Kelly. Appreciate it.
Mark, thanks again so much. Everybody, thanks for joining. Next month, we have Tamara Andress. She is a business coach and consultant, entrepreneur, podcaster. She does a bunch of awesome other stuff too. So she's going to be speaking on a couple different topics that we will have out when we shoot out the invites. I'm going to have this edited and out to you guys for follow-up, or you can share with friends, family, other realtors. I hope you guys got some good knowledge out of it. I sure did. That was definitely a fire hose of information in an hour's time. So again, Kelly, thanks again for helping us set that up. Andrew, for all the work that you did getting us set up here. And look forward to the next one, guys. Hope you guys can attend. And if you ever have any questions, please reach out to Andrew or I. We're happy to help in any way we can. Andrew, you got anything else to sum up?
No, I think you had it covered. Thanks everybody for joining. I think that was an awesome class. And I have a lot of information that I can take away and bring to some of our other clients that I found very surprising, especially on the write-off stuff. I think that's a 100% useful information that's actionable today, even without approaching Mark. But I do like to make the point too, you know, that he is a business owner. If you are interested in his services, reach out to him. I'm sure he'd be more than happy to help further and also, you know, help you in all of your finances.
All right, guys, have a great week. Good luck out there. I know it's brutal. I had an agent tell me it's like the Hunger Games. So go forth and try to survive. Again, if you guys need anything from us, just let us know. And we'll look forward to talking with you guys soon. Cheers.
Bye.